You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break down everything going on the futures options side of the fence over there at CME Group. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program and so many others right now. Remember, in these troubled times, it's more important than ever. We've seen a rash of new listeners discovering the network week after week out there. And we understand it. These are trying, these are difficult, these are turbulent times. So if you want to keep that influx of new listeners coming, if you like what you hear out there, leave those reviews in your platform of choice. Help those people who are confused out there these days. Help them find a way to our content to maybe kind of talk them off the ledge in these crazy times. And of course, keep those questions coming too. We do love to hear from you guys. And let's see who we're hearing from on the program today. I know who we're not hearing from today. Our usual stalwart holding down the FTSE Russell hot seat today, Mr. Sean Smith. He's actually on assignment this week, which is a difficult thing in the pandemic. So hopefully he's faring well. He'll be back again next week. Don't you worry, listeners. But joining us holding down the CME Group hot seat this week is an old offender on the program, even though he hasn't been on in some time. He is Todd Colvin, the Senior Vice President of Global Institutional Sales and Business Development. Say that 5 times fast. Over there at Ambrosino Brothers. Todd, welcome back to TWIFO.
Mark, thank you very much for having me.
And Todd, you were on the program, but it's been a while. It's been a couple of years since you've been on the show. Obviously, a lot of new listeners have discovered the program since that time. So why don't we go back, give our audience a real quick overview of your background in the space, as well as what it is you do day to day over there at Ambrosino Brothers.
Well, Mark, I've been down on the trading floor for the better part of 25 years, trading on and off the floor and focusing on equities, currencies, interest rates primarily, certainly looking at metals and other commodities as well. We deal with institutional clients. We deal with different bank entities, funds, hedge funds, money managers, and our job is to find them the best price for them. And in doing so, we are able to, we talk to both sides of the fence. We talk to the end user, we talk to the market makers, and our job is price discovery, and that's what we've been doing down there for a long time.
A challenging business in these turbulent times, but an important one nonetheless. Well, Todd, since you are our guest, I will give you the pride of place, sir. This is where we choose where we begin our journey in our movers and shakers report. Should we start with the light side, aka the upside this week, or should we go to the dark side, Todd?
I'm going to say let's start with the light side. Why not?
I could see
we'll go to the dark side later.
I can see why you might get along with my usual co-host, Mr. Sean. He always chooses the light side out there as well, even though not a lot of light side on the screen. By the way, you guys, as always, listeners, can play along with the home game while you're listening to the show or anytime, really. CMEgroup.com/TWIFO. This Week in Futures Options, or TWIO, TWIO, This Week in Options, also works. By the way, they're case sensitive for some reason. So if you type them in caps, not going to work. So make sure it's one of the few URLs on the planet that is case sensitive. But c'est la vie. CMEgroup.com/TWIFO or /TWIO. So you can generate, not the movers and shakers reports. We'll get to that in a little bit. We have a question about that. But you can generate the This Week in Futures Options reports that are pivotal to the show. So this week, of course, looking back, it's pretty much another one of those weeks where it's dominated in one direction. This time it is to the dark side. In fact, we had to scramble to five names that were up on the week to make the light side. Let's start at number 5 here, as we are wont to do. Soybean meal up 1.07%. We got the Eurodollars moving up a little bit, but it's enough to be in the top 5 this week, up 1.85%. They were number 2 to the dark side last week, off 9% last week. So a little bit of a switcheroo there for Eurodollars. Number 3, rough rice, up 2.4% this week. It was number 4 to the dark side last week, off a little over 2% last week as well. Number 2, oats, up 4.5%. Before you get excited, not a lot of options really flying fast and heavy on oats land. So we won't be hanging our hats there this week, but it is good for a mover, up 4.5%. And number 1 with the bullet, you can probably guess it's been swinging around a lot lately. This is Nat Gas, up 9.2%. It was number 1 in the other direction last week, listeners. It was number 1 to the dark side last week, off almost the exact same amount, off 9.29%. So a lot of swinging going on. But again, Nat Gas, a smaller priced product. So you're going to see some big percentage moves out there. Now we get to the dark side. Now we're talking, listeners, because this is where they're pretty much, I would say, 80% of our chart this week on the movers and shakers is all red. Number 5 to the dark side, our old friend, the Russell 2000, off 6.09%. It was right outside the top 5 last week at number 8. It was up to about 2.5% last week. Number 4, the peso dollar. Don't see that up there too often, but down this week, off 7.13%. Number 3, soybean oil. We've been checking in a lot with the soybean complexes, all the various ones over the past few weeks. And soybean oil feeling the heat this week, off 7.57%. And we jump into metals territory, and it's really off to the races to the dark side. Platinum off 10, almost 10.25% this week. It was actually number 10 beyond our top 5 last week, off about 0.25%. And silver off 17.03% this week. So a bad week for the silver bulls out there. It was right outside our top 5 last week as well at number 9, with about off 0.5%. So a lot to parse. We'll get to all those in a minute. But I know you hang your hat in a lot of volatility and equity over there, Todd, at AMBROSINO Brothers. So we're going to kick things off there. I'm actually going to make you do double duty. You're going to hold down the CME Group hot seat as well as the FTSE Russell hot seat, at least for this one segment, because we're seeing a lot of action in the equity space as well. It's been a pronounced couple of weeks to the dark side for equities until today, of course, listeners. The market's getting a little bit of a rally, maybe a little bit more optimistic outlook on all things COVID. Most of the major indices up 1% or a little bit less, depending on where you're looking out there. And of course, the vol moving as well. Let's start in small cap land. RVX, aka the vol, the Russell 2000, at about a 35 1/3. That puts it up over 5 handles from last week. A lot of movement going on in Russell 2000. We'll get to that in a second. Our old friend VIX Cash, a.k.a. large cap vol, about 28.80. That puts it up a little bit from last show, about 1.5 handles from last TWIFO. VVIX, the vol of vol, Talked about this for a while now. The frame of reference for this used to be about 120 to the upside was pretty active, and about 75 on the downside was pretty quiet. These days, post-pandemic, it really hasn't broken 100 too often. In fact, the last time, until what happened about a week ago, before that, the last time was February 20th. And we all know what happened on February 20th. So it's starting to threaten 100 again to the downside, which may mean it's an interesting time to start looking at equity volatility. And of course, that spread widening out a little bit again, that small cap, large cap volatility spread, VIX RBX at about a 6.5. That puts it almost double what it was this time last week. So it got really tight last week, which was kind of surprising. Now it's moving quite a bit again. And of course, let's throw in there as well that new forthcoming product from CME and NASDAQ, Vol Q, aka the NASDAQ Vol, at about 33.5. That puts it down about exactly a handle from where it was last show. That's a lot of place setting, Todd. A lot going on. We'll kick things off in the world of equities. What's been lighting up your tape over there at AMBROSINO Brothers in the equity space these days, sir?
Well, two things. And first, when you talk about equities, I think you have to take a step back. And they've been so reactive to headlines, to the fundamentals, which tend to drive the market. And then when you get to these key moving averages and you start talking about where we're headed, with key dates coming up, things like Brexit and things like the election are really driving the trade now. At this point, I'm a little more concerned with the low volatility we're seeing, say, in the VIX index, given the sell-off we've seen since those all-time highs were put in. That used to be a trigger for the VIX to spike. We just haven't seen that. And I think those that were preparing, or those that may have been long vol going into this rally, hoping as protection, didn't really see that there. And that, to me, it's a head scratcher, at least from the outside. Certainly, when you look at the reasons for the sell-off, the world has been sort of evolving since the pandemic, but nothing has truly changed other than these upcoming events. I think there's just a little bit of capital preservation going on, but I think volatilities remain way too cheap in equity lands, especially with what we have moving forward.
Interesting. And what have you been hearing from your clients over there at AMBROSINO Brothers in regard to the equity indices? In general, were they kind of big buyers of this rally? Were they a little bit spooked at these valuation levels? Were they coming to you for hedging? What kind of trends were you seeing from the equity clientele out there these days?
I think that when you go back to August, and that's when you saw a lot of the insider reports coming out of big CEOs selling, that was a red flag. I think a lot of institutional buyers were slowing at that point, and that was before we put in those highs. So at this point, when you're looking for downside protection, there are plenty of opportunities because option vol is so inexpensive at this point. Wing vol remains very cheap. And those that end up buying the at the monies, looking maybe for some instant gratification, they just aren't getting it because the moves aren't coming. The moves that, while they're coming fast enough, aren't being accompanied with a bit of volatility. So at this point, I think your cheapest protection trades are in those wing vol trades, which are way out of the money calls or puts, whether you're buying them or selling them. And that it tends to be where we're focusing our looks here, because the at the monies, if you own them, has been a very painful trade.
You're right. We have been noticing, and we could do this. You guys can do this yourselves, listeners, going on over to the tools and see the history of the skew. When we get into a little bit, it actually, even though vol has come up a little bit, we've seen a little bit of that, particularly the put wing volatility actually come in a little bit. So they are a little bit cheaper than they were a few weeks ago out there, which maybe if you're looking for some hedging activity or strategies out there, maybe that makes it a little bit more intriguing. Certainly a day like today, a little bit of a rally may give a little bit of a break out there. Let's see what we're seeing out there in particular. Let's start in all things small cap over there, Russell 2000 at CME Group. You guys can do this for yourselves, of course. Go to that drop down, select equities, select Russell 2000. You'll see a pretty active another week out here in all things Russell 2000. October contract leading the dance with a little bit more than a quarter of the papers. Let's go out to October. It's got about 22 days to go, a little bit more sane vol and skew than what we're seeing in the weeklies out here. By the way, that at the money vol in October at about a 33.15, up 6.5 handles this week, listeners. So small caps have been moving. By the way, net on the week since Monday, they're off about almost 5%, about 4.5%. So it's been a bit of a rough week for all things small caps. And we're seeing the 14.5 puts, if you're wondering. Actually, but those are the most active in October. But the most active overall this week were actually the week. Let's see, these are the September still, a little bit of September with about less than a week to go, 6 days to go, with about 10 calls doing the lion's share of the action. And again, we're at about a 1460 right now. So a little bit out of the money calls, which is kind of unusual. And also a lot of actually, I take that back. Number one with the bullet was actually Dees 1700s, doing a lot of paper out there today. So that's a little bit of a change of pace for us out here in equity land. Usually, or I should say small cap land, usually it's far out of the money puts that people seem to gravitate towards in all things small cap. Let's look really quickly over there at the E-mini S&P as well. I'm sure a lot of your clients play in that these days, Todd, over there at Ambrosino Brothers. Let's see what we can see from an action, from a vol, and from a skew perspective out here. So we're seeing S&P net on the week off about 2% here. So again, as you're seeing, it's been a rough kind of couple of weeks out here for all things equity. The most active contract, as it tends to be in the S&P, is that front weekly. People are lighting it up. About 30% exactly of the paper this week going up in that front weekly. At about a 32.53 in that front future. That's going away right now. The most active contract out here this week by a country mile are the 3,100 puts. Nearly 45,000 of those bad boys going up out here this week. Let's go a little bit farther out because it's kind of hard to analyze vol and skew with a contract that has 1 day to go. Let's go to the next most active month, which looks like, actually, this paper is pretty surprisingly spread out. Let's go to, this one only has 6 days to go. That's another SEP contract. Let's go out to Dees. Dees is usually a little bit more level-headed out here. We can get something a little bit calmer. About 11% of the paper went up in Dees. Most popular contract out there was the 2,500 puts, which is about 750 handles out of the money. Let's see. The Dees, the vol is about 28.80. It's up about 3 1/3 points out here. The puts last week, 17.5% rich. They had the money this week, about 20.5%. And the calls were 14.5% cheap last week. This week, 17.5%. So the puts actually getting a little bit up out here in Dees, and the calls coming in a little bit. So maybe starting to buck that trend as we've seen a little bit of the sell-off continue out here. So maybe the puts not quite as cheap as they were a little while ago out here. Todd, obviously we could probably talk equities for the rest of the show. There's a lot of other complexes out here lighting it up this week at CME. So where should we hang our hat next? What product complex, sir, is drawing your attention these days?
Well, why don't we take a look over in the metals? That's been an exciting trade, and another trade that I think has a lot of question marks around it, given the background of where metals and gold, silver, and whatnot have been trading over the last, call it several months. To see this pullback, I think was a little bit of a surprise to many, and I think the volatility that we've seen, the increase in the volatility we've seen there, has not been a surprise given the move.
Yeah, it has been a surprising move. Like you said, silver off 17% this week. So I think we're going to hang our hat there because that's clearly number one with the bullet on our movers and shakers. Not number one with the options volume. That's going to be gold. We'll get to that in a second, listeners. Silver coming into showtime here, about 23.2 in that front future. That puts it off 14.5% just since Monday. Remember, our this weekend reports go back. Our scans go all the way back. When we do the movers and shakers, goes back to last Thursday. So it's off 17% since last Thursday and about 14.5% since Monday. So a bad couple of days here for silver. The most active contract right now is the November contract with about 44.5% of the paper out there. So nearly half the paper this week going up in the November contract out here. The vol out there, 44.5, up 6.6 handles out here this week. Skew, let's see, the puts were slightly bid last week, 1.6% rich. This week, 2% cheap. So puts actually coming in a wee bit, not a huge swing, but a decent one. Calls about 0.5% rich last week. This week, 3% rich. So puts getting a little bit cheaper, calls getting a little bit bid up. That's kind of an interesting move. You see that usually when you move down the skew a little bit. See the puts come in as you break through some of those strikes. People take their profits off the table. People also start bidding up calls a little bit. You're seeing that a little bit out here in all things November in silver. In terms of the most active contracts, it was, let's see, if you said either the 30 calls or the 20 even puts, you're pretty close in either direction. 30 calls took it with about 1,800 contract. Those are out in Dees, actually. And then the 20 puts right behind you with about 1,400. So even handle trades right around that 23 and change level we're trading right now seem to be the order of the day out here in silver. Todd, the silver story has been an interesting one of late. It's always kind of been the stepchild to gold. These days, it's had a pretty big move, and a lot of people are starting to focus on it a lot more these days. And maybe this week, getting a little bit of a surprise to the downside. What's catching your eye out there in silver these days, sir?
Well, silver, like you said, it's always taking second fiddle to its older brother gold. But I think when we saw the gold market take off after the lows were put in March, there was some opportunity there, one, because it was a cheaper way to get long in the metals complex. And secondly, silver, unlike gold, has industrial uses. So maybe there's some solar panel companies out there that are using silver. There's a number of different uses. It's more than a one-dimensional contract. And I think at this point, silver, which caught fire, is obviously coming off much more aggressively. And I think, as you said, when we got down, we broke down and traded through several of those strikes, we start seeing a lot of that put action being liquidated, and that in turn shifts the skew. I think there's probably going to be some call buying at this point, with the idea that you've got the election not too far off, when you've got Brexit not too far off, and you got this whole economic recovery and the Fed still up in the air. Buying calls makes sense. Cheap out of the money calls that give you the upside exposure. You just don't get that same delta as being long the underlying futures contract, but you do still get the exposure. And I think that's what a lot of investors are looking for: exposure to the market and relatively cheap while they weather the storm.
And you mentioned some of your clients getting a little bit of a surprise on the big dog there, gold. It sounds like they were maybe buying into the protracted gold rally and maybe a little bit surprised by this sell-off in gold. By the way, gold listeners also selling off this week. Just, it's such a dark side week. It didn't make our top 5, but it's in the top 10. It's off about 4.7% here on the week. So a rough week for gold. It's not as bad percentage-wise as silver. But is that fair to say, Todd? A lot of your clients maybe were getting into the momentum of gold and now maybe a little bit surprised by the pullback?
Yeah, I think there was in the timing of the pullback. Clearly, it was all a dollar-related sell-off in gold, because when you're looking at the risks that are lying ahead on the horizon, I don't think you want to be selling your one asset that's going to protect you from those risks. One thing that did catch my eye here, and that is the growing open interest in, say, the 4,000 calls. And you go out to June of next year, and you're looking at open interest in these calls. Obviously, these are purely speculative investments. I don't think anybody in the right mind can say today or even tomorrow that gold's going to be 4,000 in the next 8 months. But I think at this point, that is going to keep call skew from getting sold off too far here. Is that you're going to continue to see speculators looking to hang their hat on target prices for gold. And speculators that have held on to gold futures, if you look at the CFTC reports, while they have been exiting some of their longs, they are still long historically, very much very high levels. And I think that these calls that they're buying when they come out of their futures, they're looking to own something and they're holding on to these long dated calls. So that's something that did catch our eye.
You know, that is something that's always interesting about gold. And you guys, as always, listeners, can play along as well. Choose that drop down, go to metals, and go right into gold, the big dog there. Because you're right, Todd, it's those funky strikes that always seem to pop up in gold, much more so than any other product. You know, you don't see it as much in a crude or even in the equities or any of these other products you talk about a lot, the ags. You don't see these outlandish, far out of the money bets, but you see them all the time in gold. It's just kind of the nature of the beast. I've often joked here. It used to be that gold bulls and the gold bugs were by far the most aggressive out there. If we dared to say anything negative about gold, they would come at us. Now these days that they've been usurped by the Tesla heads and everything else out there. There are far more controversial names out there than gold, but they're still obviously out there in force when it comes to the options. Yeah, 4,000 strike. That's pretty aggressive right now. Coming into Showtime, listeners, gold again retreating below that 2,000 strike at about an 1870 right now in that front future. That puts it off about 4.7% on the week. So obviously in most normal weeks, that would have been enough to make the top 5. This week, because it's all blood red out there, not exactly the case, but still a pretty aggressive pullback out here in gold. Let's see, the most active month out here was November again, about a little more north of a third, about 35.6% of the paper going up in November. And the most active contract out here, well, before we get to that, let's break down what's happening from a vol and skew perspective in November. Let's see, the vol just a tick under 19, 18.99. It's up about a point and a half. Or excuse me, almost 2 points, 1.9 points out here in November. So vol getting a bit of a lift, as you probably would expect out here this week. Skew-wise, interesting beast. Last week, the puts were bid 4%. This week, 1% cheap. So not a huge swing, but again, indicative of what we were talking about with silver as well. When you're blowing through strikes to the dark side, eventually, people, if they have their hedges on, if they're smart, they're going to take them off. And that's going to happen to the skew as a result. We're going to see it come in. It came in a little bit here as well. Calls, same deal as silver. Again, remember, when you move down that skew, it tends to rotate a little bit. The at the money is kind of like a fulcrum. The puts come in this case, because we're going down, the calls come up. And that's what we're seeing. The calls were about 0.5% cheap last week. This week, about 6.6% rich. So a little bit of a bid to the calls, kind of reflecting what Todd was saying. Maybe some folks positioning for a bit of a retracement out here. The most active contract in gold, though, wasn't in November. It looks like it was actually in December. It was about almost 10,000 of the 2,000 even calls. Probably a strike that makes sense. It's an even money strike, and just broke through it not too long ago as well. So some folks positioning. There's like most of that paper, though, was closing. So it looks like some folks, once we broke through that, they were pretty much closing all week long out here to the tune of about 10,000 contracts. So I guess once we broke through that, maybe some of the gold bugs were giving up, at least for now, and waiting to reposition. Either way, a lot of closing paper on the 2,000 call strikes here in December. Let's look really quickly. You mentioned funky out of the money calls there, the 4,000s. Todd, we didn't quite see those this week, but we did see the 3,500s in June of next year. Pretty active, over 3,000 of those going up just this week in two big trades, Monday 2,000 and 1,050 on Tuesday. Actually, I do take it back. The 4,000s traded on Monday as well. So maybe a funky fly. These have been known to go up in the far out of the money range of gold. Maybe we have one as well on Monday. It looks like 1,000 of the 3,000s went up on Monday, the D's 3,000s listeners. And then, these are June 2021 3,000s. And then 2,000 of the 3,500s. And then 1,000 of the 4,000. So maybe, Todd, we got a funky fly this week. The 3,000, 3,500, 4,000 fly going up 1 by 2 by 1 out there in June of gold. Is that kind of what you're thinking as well, sir?
Yeah, I think that does. When you're talking about a 6-month butterfly, you really are, it's throwing darts. So you have to give yourself a window of opportunity, and a butterfly that is 1,000 points wide gives you just that. So I think at this point that definitely would be on the radar is a butterfly of that capacity.
What you're telling me, Todd, is that you put this trade up. This is your clients, right?
Love our butterfly trades, but that was not mine.
That's a little bit out of the money, I think, even for you there, Todd. That's a pretty aggressive one. But again, that's gold. That's what we see in gold all the time. So it makes it fascinating. The skew moves around week after week. The vol's got some life to it again, which is fascinating. And we see these funky flies going up all the time. It seems like year after year on TWIFO, some of our trades of the year, when we break them down, tend to be funky upside flies in gold. That's just that just is a magnet for that kind of liquidity out there, which is kind of fascinating. And, there are a lot of other products that are fascinating. I want to make sure we get our listeners on as well, but we'll have time for them there, Todd. So let's hit a couple more products. What else is lighting up your tape over there at AMBROSINO Brothers this week, sir? Well, we can also take a look. When we take a look at the black gold, let's look at oil. Ah, yes. Our listeners have been known to be a little bit fond of all things energy out there. Again, listeners, you guys, as always, play along. Go to the drop down. Go to energy. Go to crude oil. And then just grab WTI. And you should be off to the races out here. Again, you can play with your expirations. I like to choose select all because I need to see everything. You guys, maybe not. Maybe that list view that loads up initially is enough for you. Coming into showtime, again, crude oil having a rough week, just not enough to break into the top 5 when such a crazy blood red week out there. WTI at, again, that 40 handle has been such a crazy just magnet for all sorts of controversy and debate. We've said it many times on the show. The skew is fading anything north of 40, and yet it has persisted north of 40 as we speak right now. It is still north of 40, ever so slightly, at about 40.13 as of a few minutes ago here. That's off not quite 3%, 2.88% here on the week. Before I start breaking down all the action out here, Todd, obviously crude oil has been a pretty active contract of late. I got to imagine a lot of your clients over there are pretty active in it as well. What's been lighting up your tape, and what have your clients been up to out there in WTI of late, sir?
Well, I think at this point it's a clear reflection of the economy and the potential for recovery or non-recovery. It's one of those closely in the moment type of commodities that we do watch. As far as looking out, the downside trade has obviously been revealed. When we saw that move back in March, we saw the position squeeze. Oil prices, like interest rates, can now go negative, and so you have to have that two-way. They have to have that two-way. There is no zero bound anymore, like there was. So now I don't think we're going back to zero anytime soon, but certainly you're going to see a buildup of puts down probably at those psychological levels, those $5 increments. Looking at like the $15 puts, I think that was a high open interest strike. To the upside, though, there's plenty of opportunity to buy calls because historically the producers are inherently long oil, so they will be the ones to offer those calls out on any type of decline. So I think if you're a call buyer, you can wait and watch. If you're a put buyer, I think you have to be a little more aggressive. And while $15 doesn't seem like an aggressive put at this point, there is some open interest building up there.
You touched on it. Before I break down the activity, I kind of want to just go back to something you said for a second, Todd, because it is such a fascinating point of contention out there and really unprecedented in crude oil. You touched on that dark period of going negative back there a few months ago. That was obviously a pretty hot button topic here on the network for quite some time. I lost track of how many people we have, our hosts, our listeners who are bombarding us. Once that front contract got down sub $1, 20 odd cents, 10 cents, people were saying, oh, it's a free, cheap flyer. Why not buy this thing? Not even thinking that it could get to, what did it get? Negative $40, somewhere in that range. So it was an insane time. Walk us through what that was like for you guys over there, Todd, at AMBROSINO. And what were the clients up to? Were they hitting you up with the same requests? Were they trying to take flyers when it got down to fractions of a dollar? Walk us through that day, Todd.
Well, there was a lot of questions. It wasn't necessarily what can I do, it's what's going on. And when you look at the cost to hold, the cost to move, to transport, all those costs were built in. And when you got down to zero and started going negative, it became cheaper to actually sell a futures contract in the negative than to take delivery. And that was really the one day. Obviously, we didn't see a sustained trade there. And now we have negatively listed strikes to protect against that. But ultimately, it was just one of those days where you just wanted to take a step back, step away from the computer and let this thing ride out, because that day was a crazy day, and we have not seen another day like it, and hopefully won't in the near future.
Yeah, is that not just emblematic of the year that has been 2020, Todd? We have actual negative strikes listed by CME now in crude oil. That doesn't sum it all up. I don't know what does, Todd.
That's a good point. Especially as we look at negative interest rates, you never thought you'd have to look at negative oil prices.
Yeah, I mean, everyone knew it was theoretically possible, right? Of course, you mentioned the delivery, all these other costs could overwhelm other things. And so we all knew theoretically in a physically delivered commodity and stored commodity like crude, that could happen. But I talked to so many people since then who have been in the crude markets for the entirety of their lives who never really dreamed in a million years that it was actually a practical thing that could happen. And yet, here we are. It's 2020, Todd. Nothing is off the table.
Nothing is off the table is right.
All right, let's get to what's on the table this week out here in WTI. Like I said, at about a little bit north of the 40 handle out here this week. So it's still stubborn, hanging out north of 40, despite what the options have been telling us for weeks out here. That's why we say the skew is a great indicator, one of the best ones out there, but it doesn't mean instantaneously things are going to move, listeners. Sometimes it takes a little bit. Let's see what's lighting it up out here this week. Over half the paper, about 57% coming in that November contract. So November is hot across the board in all these different complexes. And I said we're at about a 40 and change right now. The most active contract out here, the Nov 36 puts, with about 19,000 and change going up this week. Let's see. The lion's share of that was on Tuesday, about 7,500. Then about 4,000 yesterday and about 4,000 today as well. A good chunk of that latter paper has been closing. So maybe some folks thought we were heading back down to 36, maybe faster than we are, and taking it off the board, or a little bit of readjusting either way. About 20,000 that 36 put. Pretty active out here. Followed by number 2, the 32 half put. So this is pretty far out of the money paper here, going up for about almost 15,000, 14,600 of those. The most active day, again, on Tuesday, about 8,500. The rest kind of staggered throughout the week. And a lot of that paper opening. So closing paper throughout the week on the 36 puts, opening paper on the 32 halves. Maybe some folks rolling down, thinking we're going to threaten that new strike. Either way, a lot of opening paper there on the 32 halves. And also right behind it were the 35 puts. So you can kind of see a theme for this week's paper, listeners. No puts. All the action all the time. The big day there was actually on Monday, about 6,000 of those, then about 3,000 today. And a lot of that paper this week was closing on the 35. So 35s and 36 closing, opening on 32 halves. Interesting. We're not really threatening those strikes yet, and yet we're already readjusting. Maybe that's an interesting trend out there. Let's look and see how many calls? Not a lot of calls really lighting it up. You got to go all the way down to the 42 calls in Nove, which did only 6,500 contracts to get the first real active call on the list, listeners. It's pretty much been all puts all the time. Let's go out to the vol. The vol's almost the exact same level as the futures, listeners. The futures at a 40.13. The vol's at a 40.18 out in November. So that's where we are. Vol and future, same level. The vol's up about 5 1/3 points this week. Let's go out to the skew. Remember, we said for a while the skew has been fading the upside, and that seems to be the case again this week. Last week, the puts were almost 16% rich to that at the money, about 40 vol. This week, they're about 20% rich, so getting a little bit beefier out there. The calls, 11.1% cheap. This week, they are 12.2% cheap. So calls cheaper, puts more bid, yet again, fading everything north of 40, and yet we persist north of 40. Todd, has it surprised you the way it has us and a lot of our guests on the network here, how doesn't matter what's happening, it could be earlier in the year, even pre-pandemic, we saw the attack on the Iranian general out there that sparked some Middle East tensions. Maybe last year, going back to the big bombing of the Saudi oil fields, it doesn't really seem to matter what's happening. Things that would normally cause a huge seismic and structural shift to the upside in crude oil are really just mere blips. And they're kind of shrugged off in the marketplace in a session or two, if not shorter. And the options continue to fade anything north of 40. Does that surprise you as well? Or is that you made your piece of that out there now?
I think at this point, I've made my peace with it. Oil markets right now are still flux, trying to get their sea legs back under them. Remember earlier in the year, oil was trading at about $65 a barrel. And now we're struggling to stay at 40. I think these put buyers, when we talk about skew in the energies, it's a little bit of a canary in the coal mine. When you start to see that put skew build up, we've already seen the positions put on. The expectations have already been laid out. And what I mean by that is that right now, I think there's those that are fearful that the economy won't recover as quickly as some of our talking heads out of Washington have suggested it would. And that means oil prices really have nowhere to go but down from here.
Are you daring to suggest someone might be playing politics with economic news, sir? How dare you suggest such an outlandish
How dare
thing?
I?
What a crazy prospect, sir. But, we have time for, let's get one more complex in before we start squeezing in the listeners here. Some of our big movers this week, like oats and rough rice, not really hot options names out there, but what else on our list, or perhaps your list, Todd, is really lighting it up you think we should break down for the listeners this week?
Well, I think, to please the home team here, we are a rates shop. And while rate vol has not been something to talk about out loud, there are a few different dynamics that we're starting to see.
I was going to say rates vol. What is that? Is that a thing?
It's when the Fed takes rates to zero and says they're going to stay there for the next 3 years. How can you move a contract? And it's basically what we're seeing now is it's obviously been beaten up pretty good here. Not after the big flux we saw in March. Things got a little out of hand there in the first 2 to 3 weeks after the pandemic, after the lockdowns. But what we've seen now is a steady move lower pre-election expiry. And now all across the board are down, but we're starting to see the vol spreads between the pre-election expiry and post-election expiry are starting to widen out. They're starting to give paint a pretty ugly picture as to the market's certainty about what happens after November 3rd, which economic plan, which candidate's economic plan, which party and whatnot. We're starting to see a lot of uncertainty build there. And I think that the longer any decision from the election takes, the higher the volatility will go. So for those listening and watching rate vol just get annihilated, there may be a blip coming in the months of December and January based on the election itself.
We've been talking a lot on our Volatility Views program about that exact thing, usually through the lens of the volatility futures and the volatility term structure, which is also pricing in quite a bit of madness pre and post and during the election. But you're right, you can look at that through a lot of different lenses, and certainly the rates products are showing something similar out there. Speaking of rates products, which one really lights up your tape these days? Where should we park our hats there in the rates complex, sir?
Typically, when we talk rates at the Board of Trade or the CME Group, we talk about 10-year. But I think what's been stealing some of the thunder now are some of these longer-dated Eurodollar contracts, which trade out to 2022 and 2023, because those are the years and the moments when the Fed may actually, or at least has talked about, possibly taking us off the zero interest rate bound. So we are seeing a lot of we're seeing better put buying out in those longer dated Eurodollars, whereas in treasuries, it's been all about buying puts, given the idea that yields probably have limited downside and could rise if there's some kind of a surprise.
How did I know you're going to say Eurodollars? It's like I already pulled it up on my screen here or something. Eurodollars, of course, listeners, one of our top 5, one of the few upside movers here this week, up nearly 2%, about 1.85%. They were number 2 to the dark side last week. It was such a big, beefy contract. It does move around quite a bit these days. It also does just more volume than pretty much anything else out there. I mean, just the most active option out here is more than probably most other complexes we're going to talk about here today combined. We're looking here, the most active contract right now this week in Eurodollars was the DEES contract, and of that DEES, the most active option was the 99 and 5/8. I love talking eights and teenies again. It kind of just warms the old cockles back to the old days. On the SIBO, back when such things were the price order of the day. 99 and 5/8 out here for the puts in the DEES contract expiring this year. 90,000, almost 91,000 going up out there this week for our number one most active option here, the hot option in the Eurodollars. Let's see how that breaks down really quickly here from an overall activity perspective. The big day was Monday, 51, almost 52,000 contracts just in that one put, listeners. It's amazing how much paper goes. And this is less than it was in the past. And then Wednesday, about 31, almost 32,000. And the like day on Tuesday, 1,500. And today, about 6,200. So the big days were Monday and Wednesday out there. Let's look ahead to see. Well, let's see what the vol is out here. Again, you get a little bit more juice in the Eurodollars these days than you're going to get in, let's say, a 10-year out there, which I think is about a 3 vol. You got about a 17.5 vol out here. It's up actually 1.15 points. So we were joking earlier about rates volatility, but there is a little bit to be found out here, particularly in the Eurodollars. The skew out here last week, 17.1% rich to the at the money were the puts. This week, 9%. So the puts have come in dramatically. The calls kind of unched. The calls were 5.6% cheap last week. This week, about 5%. So again, we were joking earlier, not a lot of vol in the rates complex, but you're seeing some vol, and you're seeing some changes in vol, and you're seeing some changes in volatility skew out here, which makes it fascinating. I know, Todd, you were talking too about the longer dated contracts, Eurodollars. You can go out pretty much as far as you want, listeners. And we are seeing some paper out there in those contracts as well. Again, you could scroll for days out here in all things Eurodollar. I think, Todd, you probably can do a whole show about Eurodollars activity. Maybe one day we'll do that, Todd. What do you think?
I'd love to.
Would you say you spend the lion's share of your day doing Eurodollars and rates, or is it equities that mostly dominate your tape over there?
Yeah, our rates are our top product right now that we talk with customers about, and it's, you know, we have our moments, and right now the good thing about the Eurodollar complex is that you can look out further than just say November, December, year end. We can go out years, and that's one of the things that we've been doing right now is trying to position for the when the Fed raises rates. I'm not going to say if, I'm going to say when they raise rates, but unfortunately, it's not going to be for another couple of years, and they've told us that, and that is one of the reasons why. Well, volatility down across the board has been lower, because once you know the answer and you work your way backwards, you kind of have things aren't as dicey. It doesn't mean that things can't change very quickly, because markets will do what markets will do. But at this point, the Fed has given us a roadmap, and that's what we're trying to be guided by.
And have you seen a lot of client interest in Eurodollars, or maybe even the 10-year these days in the wake of the Fed announcement? Because like you said, the Fed kind of painted the path for us, so it kind of lays it out. Have you seen a little bit of a diminished interest?
Well, initially on the lockdowns back in March, the skew and the vols were off the charts, higher and lower than I've ever seen at any moment in my years down here. And once we got to a normalized period, obviously, if you look at 10-year note yields, they've been trading in about an 8 basis point range over the last 2 weeks. That doesn't scream high volatility to anyone. So I think at this point, everything's leaning a little bit towards the puts. If you go back to the 2016 election, 10-year note Treasury yields saw a huge spike higher in the wake of President Trump's election. So there may be some that are positioning for that and are buying way out of the money puts. The put skew leans to the puts in the 10-year bucket. Over in the Eurodollar side, it's a little different because it's married to LIBOR up in the front months. And LIBOR right now hovering at around 23 basis points doesn't give you a whole lot to sink your teeth into. If you're buying calls, you're buying par calls, which is zero. percent LIBOR, and that's while it's a popular defensive trade, I don't think anybody really is hoping for rates to go to zero. So it turns it around the other way, and you have to buy something with a little more time. Time obviously is its own problems for some because you don't get that instant gratification. You have to wait. Unless, of course, our friends at the Fed want to tell us something different, maybe change that map, but that's unlikely at this point.
Since you're such a rates guy, Todd, we'll squeeze one more in. People are always asking for more rates on the show, so we'll squeeze in the 10-year out here as well. Coming to showtime, we're at about a 139.18 out there in that front future. The most active contract, though, isn't on the front month. It's all the way out to Dece with about, we got almost 60 days still to go out there on that Dece contract. So, everyone's talking election and post-election. It seems like it's so close, and yet it still has a fair number of days worth of meat in there. Looking at the contract out here, going out to Dece. Again, this is what I was joking about before, listeners. Not a lot of vol to be found in the 10-year contract, particularly when we have, like we said, the Fed kind of laying out the roadmap for a little while. That vol's at about a 3.39 out there. So kind of hard pressed to find a lot of products that have a lower vol level. But you know what? Low vol doesn't mean low volume. The 10-year still lighting it up. The most active contract out here was Dece with about 40.5% of the paper. And the most active option amongst that, it was kind of almost a pretty close fight. But at the end of the day, it was the 139 even puts in Dece doing 68,000 contracts. If you're wondering, by the way, Eurodollar, I should say 10-year, putting up about 1.2 million contracts so far this week. So obviously, vol is not an impediment to doing some paper out here. 68,000 of those 139 puts in Dece. The most active day was Wednesday, 30,700, followed by about 18, almost 19,000 today, and about 15,000 on Tuesday. The next most active was the 139.5 puts with about 54,000. Busiest day for those was on Tuesday, 22,000 out there, and about almost 18,000 on Wednesday, and about 10,000 today. So a lot of paper out here in the 10-year. Let's look at the skew here really quickly. Puts last week, 6.4% rich. They got the money this week, 12%. So puts getting a little bit juicy, and juicy in relative terms given that we're starting with a 3 vol. And then the calls were about 2.8% cheap last week. This week, nearly 5%, 4.8% cheap. So a little bit of action out here. Todd, anything lighting up your tape out here in the 10-year this week, sir?
Well, I think in the 10-year right now, it's all about getting out of this range, this 60 to 72 basis point range that we've been stuck in. We had 3 auctions this week. We had a 2, a 5, and a 7-year. It didn't really even register on the Richter scale as far as you typically see a lot of downside positioning. For, say, example, today's 7-year, we don't really see that as much anymore. Obviously, the Fed is participating in that. That has taken a little bit of the luster away from the Treasury complex, but I think at this point now, as we get closer to the election, you're going to start to see more of a two-sided trade. The positioners that have been looking for a potential spike in yields have already laid down their track. And at this point now, you have to ask yourself, well, what if? Because the trade of pain in treasuries is lower yields, and that leads to the calls, which are cheap right now. So trade of pain, while we don't like to advertise that, is something you do have to be prepared for. And that means buying calls, and calls are cheap right now.
You also have to be prepared to answer your questions because it's that time, listeners. It's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback. This is your segment. You guys get to take the reins, dictate what we talk about. First off, this question actually came into one of our other shows, but it's so germane to this show, we had to talk about it here. This was from Theodore Domzalski. He wants to know, my question is about the COT reports. Do the COT reports on the S&P help with analysis for non-futures traders? I've read conflicting things about who is correct, the commercials or non-commercials. Yeah, I've said it before. I'm not the biggest fan of the COT reports for some of the reasons I've laid out in the past. First and foremost, it's a very lagging indicator. If you're doing all of your analysis based on the COT reports, you're missing out. It's old by the time you see it. Now, that said, maybe, Theodore, maybe you don't watch the futures that often, or the futures options, in which case, if that's the only information you're going to get as an indicator for what's going on out there, you can definitely do worse. If you're not going to look at anything else, you're just going to look at that, I guess, is better than nothing. But there are other, for example, we talk about the skew a lot on here. I like to look at more direct and immediate measures of customer sentiment out there, because you could see, for example, if the puts are getting bid up, if the calls are coming in, you could see exactly what the customers are up to out there. Whereas the COT reports, and also, you're right, there's these weird delineations of commercial and non-commercial and who really falls into those categories. There's a lot of debate over that as well. So there are other issues with that. But that said, Todd, you hang your hat out there day in, day out. I'm curious for you. Maybe you use the COT reports more often. What do you have to say here for our listener, Theodore, who wants to know, should he put a lot of stock in these things?
The Commitment to Traders report, I think it paints the picture, it fills in the gaps, right? Because you see these market moves, and obviously they're in arrears. One of the things that we look at as well is the Trading Financial Futures, the TFF data, which breaks it down even further from just commercial and non-commercial to asset manager, real money, or asset manager, hedge funds and dealers. So you can kind of get an idea of who's in there doing it, as far as the Commitment to Traders, which is more just speculator and non-speculator, or commercial and non-commercial. So I think taking a look at that for the financial futures might give you a little more insight.
There you go, Theodore. A little bit of extra homework for you, but if you want a little bit more insight, it's certainly better than just looking at the COT reports by themselves. All right, next up, we got a frequent offender here, Baiju Thomas. He says, "Hi, Mark. I must admit I listen to TWIFO every week." Well, glad to hear it there, Baiju and everybody else out there. He says, "But when I try to replicate the top 5 movers using the TWIFO link, I cannot navigate to the top 5. All I can see is the per instrument like below." And he sent a screenshot. "I'm sure you have other listeners who may also be seeing the same, so it would really help if you can tell us how from the below page to go check the top 5 movers and shakers." And no, you are correct, Baiju. I did check that before the show. And sometimes I get so excited with all the tools and all the things we're talking about that I forget not all of them go through to that page. So you are correct. If you're looking at the movers and shakers report, that is something you have to have the premium edition or an active QUIKSTRIKE account to access. So if you want to run that yourselves, unfortunately you can't. What you can do from that CMEgroup.com TWIFO or TWIO page is generate the reports that we look at for the entirety of the rest of the show, which is, as you're hearing me breaking down, complex by complex. If you want to look at crude oil, you want to look at ags, you want to look at equities, doesn't matter what you want to look at. If it trades at CME, you can pull it up on that page, and it's all for free. So that's a pretty awesome amount of data you guys get access to. The one thing you don't have, if you want, you have to have the more premium edition to get access to the market scans and some of the other things that we also do here on the show. And again, that's the folks at QUIKSTRIKE. They're a business. They need to make some money at the end. They can't give you all the data for free. I wish we could. I wish we were in that world, Baiju. But that said, I have strong-armed them into giving you quite a lot of data, pretty much completely for free. And it's all there, CMEgroup.com/TWIFO or /trial. It's kind of one of the best kept secrets in futures and futures options, really. You can get all these ridiculously great analytics for free. I mean, it's a no-brainer. So yeah, not the market scan, not the movers and shakers, but literally everything else we talk about on the show, the other 95% of it or so, it's all there. So, but good for you, Baiju, to point that out if I misspoke. I don't want to mislead anyone here on the show. Next up, Mikey. Mikey wants to know, interesting one, how do you think California's ban of the sale of gasoline cars by 2035 will impact crude oil trading and options? Yeah, this kind of just breaking news this week of California. Sounds like they want to go the way of China and try to put a limit or a ban on internal combustion cars by a couple of decades from now or so. Interesting stuff. I don't know, Todd, this is an interesting one. We just talked about earlier how the skew is just fading everything north of 40. It sounds like, if anything, this is probably going to put more pressure on that. What are your thoughts here on this potential ban in California, maybe its impact on all things crude, sir?
Well, I think it's too early to tell at this point, but going out a little ways here, Governor Newsom has obviously trying to be the first in on something like this. It'll be interesting to see if anyone follows, because one announcement does not then make a trend. I think at this point, probably need to see a bigger coalition get together to fight to enact something like this. And 2035, well, it is down the road a ways. Says to me that if he had put in maybe a 3 or a 5 year deadline, that would have a much more direct impact on the contract. However, 15 years, a lot can happen in 15 years. So I would lean on the side of this is not over yet.
Imagine if he came out and said all gasoline cars banned in 3 years in California. Imagine the impact of that. That would be a very different scenario. You're right, Todd. And certainly we'd see a lot of dramatic movement in crude oil right now. I think you're right. It is, so far, it's really kind of just a PR move at this point. I don't know if it has any teeth yet. If it gets approved, then maybe it will be interesting. California certainly has been in the vanguard of these types of things in the past. So if it is going to happen somewhere in the U.S., it's probably California is a good bet for where it might start. And it sounds like longer term, this is yet another argument to lean on anything north of the 40 handle, it sounds like here. And that's exactly what the market is showing us right now. So yeah, I guess it's not exactly a long-term lift for the crude bulls out there, but it's a long way from actually coming to pass, Mikey. But a good question nonetheless. All right, we're coming up against it. Let's see. I kind of want to wrap it up with this question here. We talked about this on our crypto show this week, but it's a related question for the futures and the options. I wanted to kind of talk about it here. This comes from Phil Timms. He says, how do those correlation numbers hold up if you go back even further, maybe 5 or 10 years? Is it still correlated or uncorrelated? This refers to a question we had last week, listeners on TWIFO, from Alanist. He wanted to know about Bitcoin futures and their correlation or perhaps lack thereof to equities. And we went back about a year and said, actually, over the past year, obviously this is an outlier year, but also these are the years when you kind of want those correlations to be most meaningful for your portfolio. So that's why we did it over the past year. And we said, actually, Bitcoin was pretty correlated, about 40% to the major indices in the equity space and less for other commodities. And we broke it all down. But we did give that caveat and said, hey, this is only for the past year. So Phil asked, it was Phil. He asked if we can go back farther. So we did, because we're nice. But remember, we can only go back. This is for the correlation between the Bitcoin futures and the other futures at CME. So we can only go back as far as that contract has been listed. Maybe we could find some theoretical way to go a little bit farther back because it's a reference rate. So there may be some abstract index values we can back test there. But right now we're limited to going back to the launch date of those Bitcoin futures, which was December of 2017. So you're talking not quite 3 years there, but a pretty good chunk of time here to analyze it. So we ran it back as far as we could. And here's what we came up with. The correlation for Bitcoin, we went across the spectrum. So we went even some silly ones like lean hogs. If you said it's probably not correlated to lean hogs, you're right. Only about 9% correlation. Class 3 milk, even less, 3% correlation. The metals, a little bit more. Gold, 18%. Silver, 18%. Again, that's not that surprising. Bitcoin has coin in the name. A lot of people conflate it with a metal or a currency type product. So that's why maybe that little bit higher there. Copper, not the same use case. So that's only about 5% correlation. Energy, WTI, 13%. Heating oil, about 15%. RBOB, about 16%. So a little bit of correlation there with energy. Actually, the equities, which is what he asked about, similar levels of correlation. S&P, about 16%. NASDAQ, 15%. And Russell 2000, we added that into the mix there as well, about 18%. So nowhere near as correlated as it was this past year. But again, this is an outlier year, so bear that in mind. And then getting into the rates, another area that's sometimes conflated with all things crypto. Eurodollar, 10-year, 2-year, all that stuff. All of them were negatively correlated and only slightly. It was 4% or less. So really uncorrelated from that perspective. FX, another area, again, conflated often with crypto because of the currency nomenclature there. Again, not a lot of correlation. The highest we could find was the pound with about 8%. Everything else was 2% or less. So again, longer term, it is a lot less correlated, which is good. I would just put that one caveat out there that a year like this is when you need that lack of correlation to kick in. And unfortunately, in periods like March, we saw Bitcoin selling off about 30% in a day. So those are the days if you're looking at it, it's an uncorrelated asset, I'm safe. Then you get hit on days like that. Remember, when when it all hits the fan, correlation tends to go to 1. I don't know if you do any crypto over there, Todd. So if you do, have at it. And then B, what are your thoughts on these correlation numbers? Surprising, not surprising? What's your take, sir?
Well, as the correlation numbers go up, I'm a little surprised that gold and Bitcoin aren't more closely correlated, given the Bitcoin store value, which is what it is right now, until it becomes some kind of a transactional currency or transactional unit. It basically serves a lot of the same principles as gold. When you look at it based on the other correlations, it is still a new product when you get down to it. I mean, yes, it's been around for a couple of years and it's had some massive moves and has what I think is a very bright future given the makeup of what's happening with the global economy. I think that it just needs more time to build. It's still an infant. When you go back, gold's been around for how many thousands of years, and Bitcoin's been around for a fraction of that. So I think the more time that Bitcoin and the more interest and the more institutional investment that we start to see in Bitcoin, those correlations may tighten up a little bit, or we may see better clarification of those correlations.
There we go. Unfortunately, that music means we've come to the end of this. An hour flies by when we're talking all things futures options. Todd, you did an able job holding down not just the CME hot seat, you did both. You did FTSE hot seat this week as well. So you did double duty. Well done, sir. And if folks are intrigued, maybe they want to reach out to you guys over there at Ambrosino. Maybe you have some content or some other analysis you want them to check out. Where should they go? What should they do, sir?
You can reach me at Bloomberg, TColvin14 at Bloomberg.net. That is where I'll be able to get any of your messages.
There you go. Check them out over there on the old Bloomberg. And, of course, check out our friends over there at FTSE Russell, at FTSERussell.com, and at FTSE Russell on the old Twitters as well. Got some great data coming out about small caps and correlation and volatility, the impact of all things COVID-19, all those webinars they've done before as well. All of that's there as well. So FTSERussell.com, the place to go to begin your journey over there. And, of course, you know where to find our reports for this show and all the great data and research they do over there. Of course, CMEgroup.com is the place to go to start your journey there. Hit the /TWIFO. You can do all the good stuff, except, as Baiju mentioned, you can't run the scans. You can do everything else out there. And if you want to do the scans, you might behoove you to check out the QUIKSTRIKE over there. If you're trading these products, like I said it before, and you're not using that software, I don't know how you're doing it. It's kind of the only game in town. So check them out over there if you are so inclined. And again, on behalf of Todd and our friends over there at FTSE Russell and at CME, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Keep them coming. We love to hear from you guys. Remember, if you like what you hear, keep those reviews coming as well. It helps new folks continue to discover the program and indeed the network. More important now than ever in these troubled times. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern, the old time, for volatility views. And then it all kicks off again on Monday with the option block all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.